Good morning. This is Josh Hayes with Hedge Plus, and here's today's market monitor. Not a whole lot of major impact going on right now, which is why I believe focus will shift more today and tomorrow into what's typically a pretty inconsequential and low-ranking USDA supply and demand report in terms of ranking them amongst the rest of them the year. This is, of course, a couple weeks in advance of the most important report of the year, the planned acreage report. But nonetheless, given how short the funds have been and how far they've driven down prices, you'd expect some short covering today and tomorrow, barring anything significant in the world occurring. Also, there's starting to be another shift on weather models to the growing possibility of a ridge forming over the U.S. Midwest, which would bring hot and dry weather. We had a slow build on that potential last week until over the weekend that ridge was taken out of forecast models, and now it's starting to come back. So we got down pretty low yesterday, and we've kind of bounced back since. And then if we get a little bit of short covering today ahead of the report, again, not a major report in terms of its significance, but they have to protect their current position, and the funds are massively short. They have to protect against the possibility of a surprise. People are expecting the USDA to adjust corn demand higher and ending stocks lower. So the funds should be positioning themselves ahead of that. So that should be somewhat helpful today, barring anything, again, major. Hard to imagine we could get anything coming out today weather-wise that would paint the picture any better. Weather's improving in places where rain is needed. I suppose if there is any risk being built into the market today from any weather model suggesting hot and dry ridge forming over the Midwest, if that were to change, much like last week, we'd probably give some of the recent gains from the past 24 hours back. Trade talks between the U.S. and China, nothing too significant. What they've essentially achieved these last 2 days is getting back to where they were a few weeks ago when they had a framework of working agreement, and then both sides accused each other of violating that agreement, and we were back to square one. Well, apparently we're back to both sides are on good terms. Nothing major is settled yet. No big announcements, but overall, market is feeling better about the chances that a deal will get struck eventually. The positivity between the two countries and the facts that they were talking again has helped July soybeans close higher 5 out of the last 6 days. South America is still getting very good harvest weather. It's dry. It's allowed them to advance quite a bit. They're bringing grains to market. It's putting pressure on the market. In fact, when we get to the next weather slide, it's actually started to get to the point where it might be getting a little too dry in Argentina. It's not a critical issue at this time, but it just shows how the nice window they've had now here for an extended period to get caught back up on harvest, especially in Argentina. And as I mentioned, beneficial rains. Chances increasing in both China and the Canadian prairies where they've been needing it. And it comes at the same time that Russia raises its crop estimates. Before I move on to weather, I just want to note that at the exact same time yesterday, when Russia was coming out and raising its forecasts for its grains, especially wheat, they declared that two of their two largest wheat growing areas are in drought. So this just goes to show you how schizophrenic reports are out of Russia. At the exact same time, they're reporting severe drought to the point where they're authorizing emergency aid. They are raising crop forecasts. So it's really hard to put a whole lot of stock into what you hear out of Russia. All right, moving on to the weather. Unfortunate for Oklahoma and Texas, the heaviest rains today through Friday are going to be in Oklahoma and Texas, where they do not need it. Other than that, the weather in general in most of the U.S. is positive, and most grain-growing regions are experiencing good weather right now. No issues with field work, good soil moisture. We will basically be in wait and see mode to see if any risk of any hot and dry stretch is developing. There are models out there, including an AI model that has been one of the most accurate in recent times, starting to build back in that high pressure ridge, where in a week or two from now we could start to see a hot and dry pattern starting to form. So that's something we're watching right now. As I mentioned, in China, rain chances have much improved. We're getting to the point now, I think, where the confidence that these rains are coming is growing to a more reliable level. And same for Canada and their prairies. And then in Argentina, it is getting a little too dry in the west, not critical, and definitely not a bad time for them to be a little drier than usual. I want to bring up international prices because this is going to be probably the number one factor really holding us back for a little while here. You notice that U.S. Gulf prices have dropped below $200 per metric ton. But Argentina continues to lower their prices all the way down to 192, and then the gap between the U.S. and Argentina on soybeans remains about $20 per metric ton. So it's a real big gap to overcome, as low as our prices are. And with Argentina smack dab in the middle of harvest and progressing quite well right now, it's going to be a real challenge to find a market for our corn and beans. And then on the side with wheat, Black Sea, Ukraine still cranking out wheat at a much lower price than the U.S., $7, but they're thankfully a somewhat limited supply right now. So we should have a market for our wheat. That's been showing up on export sales of new crop. But yeah, uphill battle to climb for a while here yet when it comes to corn and soybeans. Taking a look at overnight prices up across the board. Happy to see this. As I said, most likely, barring anything drastic or significant happening today, it'll probably be a day of potentially small gains, a little bit of short covering to protect possibilities, small likelihood that the USDA would unleash surprising numbers tomorrow. The funds being short as they are, we'll have to protect against that a little bit today. And then potentially the chance of, like last week, if this high pressure ridge starts to solidify, might to see a little bit of bleeding up from that. But the biggest positive here is to see that we bounced off those lows we saw around this time yesterday. Give you an idea, this time yesterday, July corn, we were right around 430 after dipping below 430. So in the last 24 hours, we're up about 12 cents. Soybeans are up about 2, and wheat hanging in down just about 1, but starting to bounce back right now. That's all for today. I hope everyone has a great day, and we'll talk to you again tomorrow.